A new trading week will soon be kicking off right behind me here at the New York Stock Exchange. And after last week's seesaw action, investors really are trying their best to figure out exactly what direction will the markets be moving in the upcoming week. Will we see more heavy losses, or will we see another series of strong rebounds? Because last week, despite seeing a two-day losing streak on both Wednesday and Thursday, the major averages on track for a winning week, with each up about 3%. However, affecting growth, rising bond yields, with a 10-year Treasury yield trading at levels not seen since 2008. On Friday, it traded around 4.21%, so there was a lot of seesaw action indeed last week. Will that trend continue? It's a busy week ahead with several key interest rate decisions due out on the docket. A lot to take in, so let's now take a look to see what will likely move the markets in the week ahead. Now, Monday kicks off with a series of PMI reads out of Europe, which includes Germany, the EU, the UK, and even out of the United States. And speaking of the United States, we have the release of the Chicago Fed National Activity Index for the month of September. Expectations call for a read of 49. Tuesday sees a series of housing reports due out for the month of August, that of which includes the U.S. Housing Price Index, which is expected at negative 0.3% month over month. And Wednesday begins overseas in China with the nation's imports, exports, and third quarter GDP figures. Third quarter Chinese GDP expected at 3.5%, while September retail sales figures also await out of China. Expectations call for a read of 3.3% year over year. Meanwhile, in Canada, the Bank of Canada's interest rate decision awaits. Expectations call for a rise to 3.75% from 3.25%. Now, Thursday kicks off in the EU with a continuation of rate decision, the ECB rate on deposit facility and the rate on main refinancing operations. The deposit facility rate expected to jump 0.75% to 1.5%, and the refinancing rate also expected to jump 0.75% to 2%. Meanwhile, right here in the United States, we have U.S. September durable goods orders due out. Expectations call for a read of 0.5%, while third quarter preliminary GDP also awaits. Expectations call for a read of 2.4%. And Friday sees a continuation of central bank actions, this time out of Japan, with the Bank of Japan's interest rate decision, a rate that's expected to remain unchanged at negative 0.1%. Meanwhile, in Germany, there's a lot to go around. First, there's German third quarter preliminary GDP expected at 0.8% month over month, 0.7% year over year, while German October harmonized consumer prices, those figures are also due out. Expectations call for a read of 10.9 year over year. Then here in the U.S., we have personal income, personal spending, and we also have October consumer sentiment. Expectations for sentiment, 59.8. Meanwhile, earnings season in full swing here in the United States with the U.S. midterm elections coming up. Keep an eye on all those geopolitical updates, which have also a tendency to be major market movers. And until next week, coming at you live from the New York Stock Exchange on this Friday, wishing you all a great weekend. See you next week. I'm James Swinney.